traders, so welcome back to the Sharks Trading Academy's weekly market analysis, and for today we'll go through the major pairs. So over here our first pair would be the dollar yen, and you can see what is going on here. Prices are delivering bearishly into a H4 demand area, and at this point of time you could be a buyer, right, and target for liquidity highs here. So right now we are tapping into a supply area, you can see right here. And are we expecting prices to break higher? We may not know, right? Because we are operating on a high time frame over here. So you could say that prices are ranging, and we could not be certain whether prices wants to break higher or lower at this point of time. So if prices were to come back towards this demand area, would you want to be a buyer? That's the question. Because you are tapping into a supply area. And if prices shift from here in terms of breakout structure, pulls back into this level, can you for certain say that this is a pullback into your demand area, or is this a reversal to push prices lower? At this point of time, we do not have enough information to tell us that, and that is why you are operating on a 50-50 chance for prices to accumulate here to go higher, right? So wait for prices to tap into this area, gives you the reaction. You could skip this trade and wait for the breakout of this high. Okay, so now you have a new breakout structure, pulls back, then don't you think that this is a better trade? Because prices broke out of structure, your next liquidity high is here. This left behind a sell to buy for you to get involved, targeting liquidity highs here and here, right? So how you can actually trade this is also to wait for the shift in structure here, then establish a new range, because you understand that over here when you have a shift in structure, this was your new impulse. This is your new range. If it leaves behind a buy to sell, you could be a seller here, stop loss above this level, aim for lows right here. Okay, because prices can actually come back down towards this demand, then continue the bullish order flow in terms of this level over here. And similarly, if prices were to head back down towards this level and starts to accumulate, then you can be a buyer here, right? When the supply is formed, breaks out of structure, you can be a buyer here, stop loss beneath this low, and aim for your new range, right? Your immediate range target, which is this level over here. And in this instance, we allow some partials to run, and of course, ultimately we want to aim for this high over here. But we do not just aim for this high without taking partials, because we understand that prices may hit higher, then break down, or prices may not even make a new high here. Liquidates this position, breaks down. This is all possible, right? And that is why we want to trade what is within our range. Next up, we have gold, and you can see that prices are delivering bearishly. And now I have two areas to buy from. The first area being this demand zone here, and the second would be the one lower. So if I want to be a buyer, I would buy at these two levels. So you can see clearly this demand level has been mitigated by this wick over here, right? And that's why you want to go to the lower time frame to see if we have any unmitigated areas. And clearly we have one over here. So with this projection in my head, I'm expecting to sell until prices reach either of these POIs over here, right? So now moving on to our lower time frame, you understand what are prices doing over here. With this strong sell side move, I expect prices to pull back into this area or this area over here. So these two is my two supply areas that I'm looking to sell from. Okay, take sells at these two POIs for prices to go lower. So of course, understanding that this is a demand area that may eventually accumulate here to push prices higher. This is possible as well. And that's why you want to see what happens over here. So if you have looked through the dollar yen trade analysis that we talked about, this is the exact same scenario. Prices taps into a demand zone, broke out of structure over here. But this breakout of structure taps into another POI, another supply area. So at this instance, when prices comes back down, we do not know whether this is a pullback or this is a reversal, right? Because typically if we do not see any supply zone here, then of course we're going to take buys here, right? But now that prices taps into a supply zone, this supply may be the one that breaks the demand, okay? And in this case, it did. And that is why we did not buy over here. And also, we wanted to see a shift in structure here, especially when prices steps into a supply area over here. And buy up, right? So typically, if this wasn't a supply, we may be a buyer here in terms of buy limit orders and targeting liquidity highs. But of course, because prices steps into another POI over here, then of course we wouldn't take a risk entry and wait for the shift inside of here. So this is the trade recap and breakdown for gold. Next up, we have the dollar cap. So let me just remove all of my drawings. So this is really clear cut, right? First, we have a break of structure over here, leaving behind demand areas to get involved. Okay, prices taps into this area, gave us a break of structure here. So for me, this isn't a break of structure. And for some traders, they use weak breaks as break of structure. For me, the break only happens here. So now, where am I looking to buy from? And where am I looking to target? I'm looking to target towards this area here. Understanding that this entire area may be a buy to sell, right? So now, two areas to buy from. First would be over here. Second would be the one below. Okay, so this may happen, or this may happen. Any of these two would be the trade idea. So if you go down to the lower time frame, you understand that you can refine these levels into this, or even this one over here. So now that prices broke out of structure here on the H4 time frame, you understand that you can wait for a move down into these areas, accumulate on the lower time frame, gives you a structural shift, then target this level and higher. And also understanding that this is a trend line. Okay, so we use this as trend line liquidity, where prices may actually move down, deliver bearishly, and then when it taps into the lower demand area, then starts to accumulate to go higher. This is possible as well. So these two will be the POIs that we are looking at. And until we get confirmation, we do not take the trade idea. Next, we have New Zealand dollar, and you can see here we have a break of structure. And perhaps you have gotten involved to buy over here. Okay, and now when you see prices starts to break lower over here, then you know that the buyers will be sell side, and that is why we are trading this bearish move, trading into these demand areas over here. You can see this is a demand, this is a demand, and this is the higher time frame demand area. So when prices left behind this supply area, we dived into the lower time frame to look for ways to trade downside. And clearly here, when prices taps into this supply zone, we are waiting for a break of structure. So this was the demand area that we're looking for, right? At this instance, if you want to be a buyer, you will have gotten involved over here at this demand. But when this demand failed, then you know that we can actually look for sells immediately. So I do know some of the traders actually traded this supply area immediately. Sell, stop loss above this wick, and aim for lows, right? Targeting these liquidity lows over here. So this was a quick trade for them. And for me, I actually waited for the last up to down move over here. So you can see prices makes its way down. And to some traders, this was a missed trade. But for me, I know that as long as prices doesn't tap into my POI over here, my daily buy area, then I know that I still have space. I still have a chance to get involved in the market, because on the higher time frame, if I want to be a buyer, where am I buying from? Over here is a possibility. You won't buy anywhere inside of this leg over here, because you understand that there are imbalances to be met, right? And there isn't any demand areas for you to get involved on the higher time frame. And that is why over here, prices makes its way down, almost tapped into our buy zone, but understanding that we have a range to play with. You can see this is still a range to play with. So as long as prices doesn't move down into this demand, any pullback towards the higher areas, I am still sell side bias. And when prices makes its way higher, I have a sell limit here, stop loss above this level. So can you see now, this to me was a pullback. And why is that so? Because this didn't tap into any higher time frame demand areas. My higher time frame demand area is here. This didn't tap into a higher time frame demand area, and that is why we are certain that this may be a pullback. Okay, and we actually held through this consolidation period and eventually hit take profit over here. So I'm still looking for sell side move because prices just broke out of structure here. You can see this was a candle close. So this means that we can look for sells if prices were to come back into this supply or this supply over here. So my two POIs would be this here and over here. So look for the shift in structure on the lower time frame because you understand that this is the ultimate high. Okay, unless prices breaks this level, you are still sell side buyers, and that is why prices can actually come back up, liquidate you, then break down. This is still possible. So look to confirm these areas on the lower time frame. Then take sells here. Aim for your first range low over here, and of course liquidity lows beneath. Similarly over here, you can do the same thing. Wait for the shift in structure here, and then take prices lower. Next, we have New Zealand CHF, and I'll actually go through the trade idea that we took, then go through the technical portion. Alright, so we have a supply zone here. Prices taps into this. So how do we get involved? At this instance, if you want to be a buyer, where do you want to buy from? You want to buy from here, and perhaps over here, right? So now, you can be a seller here into this level, and then assuming prices wants to go higher, it would have already done so, right? And we either trade into this demand or wait for the breakdown and take sells into this level. Okay, so now drop down to the lower time frame and understand what is going on. For me, the break of structure would be at this level. So if prices were to break down, gives me a pullback, I can take sells into liquidity lows here for my first target, and target 2 would be this demand area because I know that this is a valid demand area and traders are looking to buy from here, and this buy may bring us towards higher prices. Okay, so let's play on. So you can clearly see at this point of time, prices breaks out of structure. I am already valid for sells. So do I sell here? I do not sell here, right? Because if you sell here, stop loss above this level, you do not even get 1:1. Right? This is a 1:0.25 trade, and this is not good risk to reward at all. And I was looking for a pullback, then a breakdown. Okay, so it didn't happen. It taps into my buy area, right? And at this point of time, I was looking for a break of this demand zone so that I can look for my next target, which is here. Okay, so let's play on. Okay, at this point of time, you can be a seller again. But do you want to sell here? Because if you sell here, stop loss above this level, your next target will be this level. This is again a 1:0.2 trade, and this is not a good risk to reward. And similarly, I was waiting for a pullback for sells. Okay, so play on. Now you can see prices starts to pull back, and we did not touch our sell side liquidity yet. So there was no grab of liquidity, and we understand that we have a range to play with. So any pullback can catch sells. Okay, if you get a pullback towards this area, we can catch sells towards the downside. So let's play on. At this instant, you could have been a seller here because you understand that this is a higher time frame supply area. You can be a seller here, stop loss above this level, and aim for liquidity lows over here. And this will net you around 1:2.5 trade. Okay, so now let's play on. So you understand that prices actually taps into this supply eventually. Okay, over here, it taps into the supply. Okay, this is the H1 supply zone, taps in. And the truth is that we don't get involved here. I didn't catch a trade over here and waited for the breakdown because I missed this trade. And I understand that as long as prices didn't touch my sell side liquidity, I'm still valid for sells. And I was looking for other ways to get involved. And how did I do that? First, when prices starts to move off from here, you know that this is a H1 supply and you can validate this supply zone. How do you do that? Go down to the lower time frame. Wait for the break of structure, which already happened over here. So then again, if I get a pullback, I can catch sells, right? Because you understand that right now you have a break of structure. You understand that this is your range. All of these are your targets. And that is why you are still valid for sells. So this is where we get involved. Okay. We get a 5-minute supply zone here. And this is how I actually place my sell limit. Okay. I got filled here. Stop loss above this level. And aim for liquidity lows here. And you can see prices actually taps into my area, makes a move down, and then goes to a higher area. Okay, and where did it mitigate ultimately? This refined area, you can see this is a 3-minute supply area. The last buy, the literal last buy to sell candle that actually held. Taps in perfectly and makes its way down. Okay, so eventually we hit take profit, but this could have been a better trade idea. So there are two ways to actually take this trade. The first would be to place a sell here, stop loss above this level, aim for lows. And in this instance, you have gotten out of the trade. The second would be to sell here, stop loss above the highs, and aim for the same target. And in this case, your second trade would have gotten you a 1:12. Alright? So it depends on how you want to manage your trade. What is your risk appetite? Whether you are okay with having a lower hit rate, but a greater risk to reward. So now, where are we looking at? I'm still looking for a sell side move. Eventually, taking all of this sell side liquidity, tap into this area and see what happens from there. So my ultimate take profit area will be at this level here, this demand zone. Because if prices wants to head higher, it would head higher from here because this is a bullish move, right? So if prices accumulates from here, then we can see higher prices to be met. But if prices were to break down, then you can look for sell moves all the way down. Okay, so this is the trade idea for NZD-CHF. Next up, we have the New Zealand CAD. So I'll again do a breakdown because we took NCAD as well. So you can see that this is a supply zone on the 8 hours time frame. Okay, prices broke out of structure over here. Came back all the way with this bearish move, right? So at this instance, our ultimate sell side liquidity would be this low over here. So the truth is that we could sell here and target for this level for 1:38. Alright. So what happened here? At this instance, we're looking for a break of structure and a structural shift. And you can see clearly here, we tap into this level. And I didn't get involved here. Okay. This shift didn't break out of structure. You can see this was the low that we were looking for. Prices taps into this level, failed to break this structure. This demand on the lower time frame held. Okay, inside on the lower time frame, you should have seen a sell to buy. Okay, prices taps into this demand area, mitigated and moved higher. So where was my shift? This was my shift in structure because now that prices creates a higher high over here, you can see this was the higher high. So where was my break of structure? Where is my break of structure? Here. Okay, so prices makes its move down, failed to break lower, and now you can see this was a higher high. Okay, and broke a low. So now this was my shift in structure. And where was I looking to get involved? Here. Okay, immediately after prices breaks out of this level, I'm looking to get involved here. So I have already placed a sell limit here, stop loss above this level, and aim for liquidity lows all the way down towards this level. So this was the trade idea. So as prices makes its move down, you understand that I didn't get filled until here. Okay, so whatever that was happening here was just a move to mitigate these areas before the sell side move. And that is why when prices continue moving, you are holding on to your buyers because you understand that the shift happens here. This was your protected high. And as long as this high isn't invalidated, you are still looking for sell side moves. So of course, prices bounce at this demand for several times, and you understand that ultimately you are still sell side buyers. Okay. So at this instance, we are at live market. We are still looking for this to be met. And prices did make a move up over here. So where am I expecting prices to bounce from in this case? You can see break of structure, leaving behind supply zone. Over here, we want to go to the lower time frame, maybe the 5 minutes time frame, and look for the shift in structure to take prices lower. So at this instance, where is my break of structure? My break of structure is here. Okay, this is my break of structure. So if prices were to make a move down, taps into a buy to sell, I can look for my first target over here. So you can see your first target is always at the range, because you know that this is your impulse that broke out of structure and you're operating on the lower time frame. So naturally your target one should be at your lower time frame, which is here. Then allow the remaining target to go lower, okay, into where you are initially looking for, which is this level over here. So if you're to sell, oh, this looks bad. So again, okay, this is your 5 minutes low. When prices breaks down, pulls back, you sell here, right? Stop loss above this area, and then you will aim for sell side liquidity if this happens, okay? And then you let the remaining positions run down towards this low. So of course you will take profits over here as well, because you understand that this is a demand zone. Okay, prices may move higher, taps in and continue moving higher. So this is perfectly valid. Next, we have the pound CHF, and based on this, you can see that we are looking to sell because we have a break of structure here. Left behind a supply zone, prices taps in, gave us a rejection, and now we are looking for a move like this, tapping into supply, then a move down, right? So let's go down to the lower time frame and see what is happening. So over here, I missed a trade here, right? Because you see now we have a break of structure, leaving behind buy side liquidity. Prices came back down, taps into your perfect demand area, and went off. So if you are an aggressive trader, you would have bought here, stop loss beneath this level, and gotten a 1:4.5 easily. But for me, I'm always operating on a confirmation bias. I always want to confirm my demand zone, because the truth is you do not know whether your demand zone is going to hold. And that is why I want to confirm these areas by means of a lower time frame structural shift. So at this instance, I was looking for a lower time frame structural shift. Okay, 1 minute time frame. When prices steps into this area, this was a change in character. For me, this is a change in character, not a break of structure. And traders will have gotten involved maybe here if we get a pullback. So let's see. Okay. So they didn't get filled here. You will have missed this unless you use this as your confirmation. Okay. For me, I was waiting for a break of structure and it only happened here. So now I'm valid for buys. I was hoping for a pullback, then a continuation higher. So I placed my buy limit here, or on the higher time frame. I think I placed it over here. Okay, this was my demand zone that I was looking for. Buy limit, stop loss beneath my pivot low, and target towards the highs over here. So I play on, and you realize that I didn't even got filled. Okay, prices just continue moving higher because on the lower time frame, prices were delivering bullish. There wasn't any break of structure on the lower time frame, and that is why prices never ever came back down towards my level and eventually hit take profit. Okay, so let's just move forward. Understanding that prices eventually tap into our buy side liquidity. So we may have gotten involved in this complex pullback here. And for me, I didn't, because I always want to buy low, right? There wasn't any incentive for me to buy in the middle of the range because this is the entire move. This was above the 50%. So I'm buying at a premium area. And this is not what I'm looking for. I'm always looking to buy low. So at any point of time over here, if I get a pullback, I will buy, right? If I get a pullback, I will buy. Next, we have the euro dollar. Clearly, we have a demand area here that broke out of structure over here. Okay, so this liquidated the highs over here. You can see this was a buy side liquidity where prices actually grabbed here. right? And what are we looking for? We are looking to buy at this demand or sell into this demand. So drop down to the lower time frame, you understand that prices is delivering bearishly over here. And we are expecting prices to mitigate this supply area before moving lower. And over here, if prices decides to accumulate, we may potentially get involved in buys. Okay, so now this is a supply zone that we are looking for. So if prices were to come back up, give us a lower time frame structural shift, we can look for sells. Breaks down, pulls back, look for this kind of a movement, right? A break of structure, maybe here, here, or here. Then the last buy to sell and aim for lows. Okay, so this is one of the trade ideas you can look for. Otherwise, if prices were to hit higher from here, liquidating this level, then you are looking for the next supply area because you understand that we are still in a bearish order flow. This may be a liquidation, okay, to tap into this supply here for prices to go lower. This is still valid for sells. So my first two POIs would be these two areas over here. And whichever that gives me the confirmation by means of the lower time frame structural shift, I will take them. The next pair would be Aussie dollar, and you can see we operate on a weekly time frame, right? Prices steps into this supply, we got involved somewhere here, okay, along the way, and we actually got involved again over here. So where are we trading from, and where are we trading into? If I want to be a seller here, I'll be a seller until prices reaches this demand area because this is a bullish move. And if prices was to hit higher, this is one of the POIs to hit higher from. So dropping down to the lower time frame, you understand that we have a sell side structure. Okay, this is a sell side structure. And as long as this sell side structure is holding, we do not expect prices to go higher, right? So at this instance, we have two POIs. We have a break of structure here, understanding that this is the middle of the range and this is a better sell area. Okay, so I actually made a video on this for my students, and at this instance, I was looking to sell at any of the POIs, of course, with a higher bias towards this area because this will give me a runner from here towards the lows for 1:4, depending on how I manage the trade, of course. So now when prices steps into this area, as long as it gives me the shift in structure and the lower time frame confirmation, I was ready for sells. So you can see what happened here. When prices taps into this supply, did a shift happen? You may argue that this was the shift in structure, this was the break, okay? And then traders may have gotten involved at a premium price either way over here. And took a sell move towards this demand because you understand that now prices taps into this area. Okay, we have a break of structure into a higher time frame supply, and when prices comes back down towards this level, this would be where buyers are looking to buy from because we are still operating on a bullish manner, right? So now the same question applies again for gold and dollar yen if you have listened it carefully. Over here, when prices pulls back, is this really a pullback or is this a reversal? Because prices taps into a POI, you see. Prices taps into a demand zone, so you have no idea whether this is a pullback or is this a reversal. And that is why your target for sells, if you have taken over here, should be this demand. Unless you see prices breaks the demand, that pullback, then of course you can expect prices to go lower. But now this demand held, right? And of course we only know whether this demand held after prices breaks this structure. Okay. So now when prices makes a higher high, we are looking for ways to sell. And at this point of time, there wasn't any change of structure. There wasn't any break of structure until this happened. This was the clear break of structure, leaving behind a 3-minute supply area for us to get involved. You can see this is a 3 minutes unmitigated supply. And this is how we actually got involved. Taking profits here, here, and ultimately here. Okay, so prices went even lower, all the way until our weekly bias. And this could have been a 1:13 trade. Okay, and now we are at our 8 hours or 4 hours demand area. So be wary of prices around here. We have two areas to buy from. You can buy from here or here. So wait for the confirmation, wait for the shift in structure, then buy from there. Next, we have the euro pound. And at this instance, I'm looking for a buy into maybe this supply here and this supply here before prices were to head down, right? So that is the bias for the euro pound. So you can see clearly what happened here. We actually lost a trade at this demand zone. Okay, prices taps into a POI, a demand zone over here, broke out of structure, and at this instance, we are looking for buys, right? But what we failed to understand is that this higher time frame grab of liquidity makes a shift down. So this becomes a pivot high, which means to say that prices may be redistributing over here because on our high time frame, prices makes a high, and at this instance, if prices comes back down, this would have been a good buy opportunity to target towards this level. But you can see what happened here. It makes a high, went down, makes a higher high, and this high didn't break. Okay, it liquidates this position, then a breakdown. So this creates a supply zone. Okay, and eventually this made a sell side move. So what I did was I placed a buy limit here instead of trying to confirm these areas, because at this point of time, you weren't sure of what prices are going to do. So if you were to go down to the lower time frame to try to validate this structure over here, you realize that you do not have any confirmation. And that is why this trade, like what I've said over here, could have been avoided. Right? So definitely looking for a move towards this high, okay, this inside bar here for sells. Otherwise, wait for the higher POI over here. And this would be a better sell for sure. Look for the distribution for prices to go lower. So this is the trade idea for euro pound. So lastly, we have the euro yen. And you can see this move over here was generated by this demand area. You can clearly see that this is a demand zone that was left unmitigated, leaving behind imbalances over here. So when prices came back all the way down to fulfill the imbalance as well as the demand zone, we are looking for a shift in structure, understanding that we are trying to grab all of these highs over here and eventually into this supply. So there is a tendency that prices is going to go up, then breaks down, right, to continue this bearish movement. Okay. So now you can see prices makes all the way towards this area over here. And you understand that this was a break of structure, but it didn't tap into the supply zone. And that is why we are still looking for buys. Okay, understanding that there is a demand zone here. So let's drop down to the lower time frame and understand what is going on here. So now we have a break of structure here, leaving behind the first liquidity range. So this is the inside range that we're looking for. And we can be a buyer into this area before allowing the remaining positions to run towards this area over here. Okay, and ultimately, of course, this refined zone here. So the trade idea is that we want to place a buy limit here. Stop loss beneath this level and then aim for this area right now. So you can see that this move is really bearish and we want to look for confirmations on the lower time frame instead. So if we did not look at how these prices are moving, then a buy limit would be great here. But if we see prices moving down bearishly, then for me, I would like to wait for a confirmation on the lower time frame, then look for the highs to be met.